for our last panel of the day. We're going to be talking about Building in the Rain, a Web3 entrepreneurship panel, discussing hottest trends, how to find venture during the crypto winter, and which fields VCs are most interested in investing in. It's going to be moderated by Tomer Afek, the co-founder and CEO of Spacemesh, and our panelists are Tomer Niv, crypto investor at Entrée Capital, Shahar, head of marketing at Secret Labs, Nimrod Lehavi Entrepreneur, investor and advisor, Alon Leibovich, the managing director of Intel Ignite Tel Aviv, and Esfir Eppelbaum, co-founder and blockchain product innovation at Kitchain.
Yeah.
Is someone missing the microphone?
1 2 1 2.
Okay, thanks.
All right. Thank you all, you brave people that managed to stay here until now. We've just heard a really interesting presentation from Roy on how this can fit with traditional industry. And I want to jumpstart this panel by asking, should we play nice with older industry? Should we alternatively go deeper into crypto native? And where, you know, in this broad kind of separation, where do you see more opportunity and why?
I will.
Please.
So I'm gonna approach it from a product point of view. I think that we have to, in some degree, take in account Web 2 and to correlate it with Web 3 in order to create a real adoption for people to overcome also the barriers they have now about crypto. And it's even bigger than that. I think that my personal view about it is that, of course, we need to go deeper in Web3, in decentralized and crypto, yes, but not to throw away or not to exclude the Web 2 and to find a proper way to create a bridge for both of them to exist. And we can see that happening in the super apps already, which is a great example of how you can manage that and coexist the two worlds.
Can you say just one word on the why? Why do you find it important? I mean, there's obviously money there, but maybe...
Of course. I think that crypto, like everybody who is here, crypto is like, is well known to crypto and blockchain, most of us. But most of the world, about 96% of them, are not there yet. And I think that in order to have the mass adoption, my why is the mass adoption that is a process in order to get there. And you know what, I'm not sure that I would want to go it, even if not the adoption, I'm not sure that I would go totally Web3 without taking the consideration the advantages of Web2, in a way.
Yeah, great answer. Thank you.
Thanks.
Anybody else's perspective?
I think that we should, as crypto entrepreneurs, investors, whatever, I think we should look at it not as something that we can bridge, but as a process. It takes time, takes way longer than I thought, like when I started my way in crypto. It's going to take another couple of decades probably, even more so now with FTX and the US regulatory environment being much more hostile. I think that every time there's a bear market cycle, it's time to kind of go back to basics and bring decentralization and transparency and actual value to the users, and kind of, let go of all the bullshit and money-making schemes. I definitely think that the end game is 100% crypto, blockchain, whatever you want to call it, as an environment, but it takes a lot of time, and you can't just say, okay, we're moving to Web3 screw Web 2, it doesn't exist anymore, we don't care about it anymore. It's, you need to bring actual value to the users so they will transition into what we think of as Web 3. I don't think you can just tell them, okay, this doesn't work anymore, start working in this. Because. Why? Because we think it's great. No, you have to provide actual value and then people will transition slowly and gradually.
And if to give some more color about the shift from Web 2 to Web 3, so what we see today is companies mostly trying to explore how to engage with blockchain technology, and even the big enterprises, they're using either marketing budgets or innovation units budgets in order to launch MVPs, and even like Reddit, for example, that they launched the NFT avatars in the platform, which got to allegedly 3 or 4 million wallets. We can't really know if it's 3 or 4 million users. Okay. It was just an MVP. And if you're really thinking about, okay, what does it mean for Reddit to become crypto native? It's probably a process of 3 to 5 years. And I'm not even sure what what's the correct type of question that we need to ask. Does it mean that Reddit will now move from AWS to IPFS? Will they use blockchain infrastructure or just enable NFT integrations, or does it mean to use I don't know, crypto payments, for example?
What worries me, if I may, before I let you, is, for example, there was a great panel earlier about regulation, and the answer for FTX type scenario was more regulation. Surprisingly, Barclays have the opinion that had basically FTX was more regulated, none of this could have happened. And this is exactly the kind of wrong takeaway from my perspective. This is more reasons to trust the system over trusting the human. And I worry that the original calling here is diluted. Nonetheless, I completely in agreement that we need to, if possible, be in relationship with the old economy, but not forget why we're here and what we're trying to do. So,
yeah, speaking out of kind of, I'll emphasize the first part of the organization that I'm with, Intel. We're Intel Ignite, so we're like the startup program, etc., and we're very much into the kind of the Web3 ecosystem. But I'm looking at it from my seat as the person who's supposed to not only communicate with the ecosystem, but also supposed to communicate it internally back to Intel. Intel has a desire of not missing this trend, okay? It's a huge shift, right? A tectonic shift. But the way it's been built up until now, it's been inaccessible, yes. Okay? For Intel to try and latch onto something. People speak about like whether this is healthy, it's not healthy. I think it's reality, what happened, okay? It shows us that it wasn't healthy. That's the end result of it. And I'm looking at it as more of a merge, okay? To kind of borrow some of the terminology from the Web3 ecosystem rather than a shift. Cool. It needs to mesh together better because right now it's the siloed building of like Web3 ecosystem next to Web 2 or legacy world, it won't connect.
Yes, it just, I can see two ways. I can see trying to connect from the very early days, and I can see crypto rising as the phoenix from the sand with very sophisticated capacities if it stays pure crypto longer before trying to merge. And I don't envy you for trying to explain to the old folks at Intel why would one do this and so on and so forth. I've been a venture capitalist when people explain to me that Facebook is going to die very quickly. This is a bubble. So yeah, I mean, my condolences, my friend.
And by the way, I think there is huge appetite and understanding of the benefits decentralization, of like the standalone technologies and where they can benefit. There's also a very, I would say, woke understanding of like we need to apply it to the use cases where it fits the best. Like, you shouldn't arm wrestle it into every corner of the world where it doesn't go. It should lean on the advantages that it has.
And maybe just to follow up on your remark about FTX, so there was regulation. FTX were regulated by many regulators. Most of the regulation
in the Bahamas,
today,
you know.
yeah, but also in the United States and in Europe, they had like 20 subsidiaries. Most of them were regulated. The problem was not yes or no regulation. Even though most of the regulation today globally is focused around AML, and the FTX problem was more of market manipulation and just pure fraud. So there, for example, there is an opportunity for entrepreneurs to build risk management tools, even if it's for centralized exchanges, and to take some of the values of blockchain, such as transparency, immutability, auditability, to the centralized work. Company, Israeli company like Solidus Labs. So they're trying to track and monitor whether traders in an exchange are doing market manipulation, but no one thought that we will need to have tools in order to make sure that the exchange doesn't do market manipulation.
Yes. Yes, Tomer brings a great point. I think that if you want to live on the borders between Web 2 and Web 3, you have unforeseen risks, which you should factor in as a risk factor, because you don't know, regulators will flip and change their mind, and they will act in a non-predictable fashion because of bribes and whatever is controlling their agenda. And potentially, at a pure crypto level, you have more forecastability.
I think it's a great opportunity, as always, to bash VCs, and I think that Sequoia is, created a major problem there with investing in FTX with almost no due diligence. There are some allegations that it wasn't really an investment, like they invested $250 million and Sam invested $250 million in Sequoia. Complete distransparency, complete distrust between the systems, horrible for their reputation. I'm surprised that no heads are flying there. But also...
How are you surprised? You're surprised.
Yeah, I was also surprised nobody went to jail after the subprime. But still, I'm surprised.
Paul Krugman, the winner of the Nobel Prize for Economy, just used this opportunity to explain to the world why blockchains are useless.
Of course.
What is it for, he asked.
Nobody needs transparency.
The boomer is wondering what blockchains are for.
It will get in the way for him making more money. But I think investors have a lot of responsibility pushing you see it in every bull market cycle. Investors are flocking to everything that has blockchain or now Web3 or NFT or something in the title, putting a shit ton of money with no restrictions, and they are not looking ahead of what we, in the beginning we saw the great vision at the time it was Bitcoin, but transparency and decentralization, they should be used when it makes sense, where it makes sense, in applications that make sense and benefit everyone, not just, because at the end of the day, the problems with FTX, and now the general public looks at it as problems in crypto, were just problems from the old economy. No transparency, insider trading, fraud, all of that, and it has nothing to do with crypto. It has everything to do with the old economy.
Exactly. And also what you make a great point about decentralization doesn't mean necessarily that we are religious in the sense that there got to be no government or no top-down. No, it doesn't mean that. The interesting things are actually in the intersection between the centralized and the decentralized, but when you claim decentralization, you need to be, in fact, as such, and when you start to compromise with decentralization by means of saying, this is my way of connecting with Web 2 or something like that, this is when the trouble begins. I think we're here to help entrepreneurs more than to bash VC, so let's talk about, I think, number one, why? Why crypto? There seems to be way easier ways to make money nowadays. Why insist innovating in our somewhat extremely cyclic industry?
First of all, I would say that the money is still there, whether it's VC money, investor money, or just issuing a new coin, a new token, and just Decrypt recently published an article in Q3 of this year with all the winter going on. Crypto is still a very large funding ecosystem with Aptos and a few other coin offerings drawing a lot of money. So it's still where the money is in a lot of parts. VCs maybe a bit less now. Second, I think there's more of a mission and intent in Web3. I have a good friend of mine who's about to launch a new project. He's undecisive yet whether to go Web 2 or Web 3, and from what I could advise him, if you want to build a community around it and not just have another SaaS product to try and sell to organizations or B2B or whatever, you want actually people to get behind it and believe in the cause, then Web 3 is the place to be.
Again, taking kind of our angle here at Intel, we see Web3 as a major compute opportunity. Intel's mostly interested in anything and everything that generates compute. And Web3,
on the distributed sense, you mean? Like
anything and everything that powers, that needs compute power in order to operate. Web3 has a major potential in all different applications. For us, the infrastructure layer is obviously coming from the legacy side of where Intel was born, is particularly interesting. But all other use cases and applications are also very relevant. Again,
are you seeing interesting AI plus blockchain stuff?
I think there is there something that doesn't have AI these days? So I would say it depends. I would say that one of the interesting applications is a combination that we've recently seen between a Web3 infrastructure build and generative AI, to be particular. To us, they represent two of the biggest future trends.
Correct.
In the kind of deep tech scene. And I would say, again, just going back to kind of the other remarks, it depends on the use case. You shouldn't be forcing it. But building in Web3 should be as good as any other ecosystem. I mean, vertical, if it justifies the actual cause, not an arm wrestle drill.
And I would add a simple argument that it's still new technology, a young industry, so any founders in Web3 will have, the first mover advantage. So it's also a good reason, when you try to explore and ideate what you should build. So you can look at, climate and ESG or AI, and blockchain is definitely still a place with a lot of potential. I think fintech was a couple of years ago, and SaaS was 10 years ago.
Huge risk, right? And huge risk. I mean,
high risk.
As an investor,
that's the game. That's the game.
The idea.
That's the game we're in.
you don't want to be too early to anything. That's even worse than being too late.
That's also true.
I would like to add also a follow-up to all of the follow-ups. Two things from the builder's point of view. One,
Already generative panel here, huh?
already happening. So one, money or economy or monetary system, no matter from which approach we will take it, defines the way humankind interacts one with each other and our beliefs and our values. To create innovation in that kind of field and to provide customization without even talking about the DeFi part of it is creating something with huge, huge impact. And from the other side, to do it in a Web3 industry while you can scale up really quickly using open protocols, much quicker than any other industry at the moment, is pretty amazing.
Oh,
the
yeah.
combination of two of them are exciting.
Correct. Thank you for saying this. I couldn't agree more. I think the big realization that money is not out there, but rather value flows can be constructed in a way that is supportive of given values and we don't just have to, dumbly tumble along, is one of my major attractors towards this industry. So thank you for saying this. So in the crypto, you don't know what to expect. Winter, summer, shit is moving all the time. How can you smartly plan your funding and make sure you don't give the bad VCs and their shenanigans too much of your company, and then again, you don't go out raising at the worst winter or something of that nature. So just tips or anything for the entrepreneur that is thinking how to plan their financing in a longer fashion, right? Not. I don't want to survive the next year and I have like a bidding between 3 VCs, but rather I'm thinking about the time it will take to achieve this and the whole funding that might need and so on.
I would actually, I don't think that this advice would differ from any advice that I would give an entrepreneur building in any space. I think a bearish cycle, and this is a particularly big bear that we're in this ecosystem, is a great time to start building. I think the fundamentals are answering a real, actual, tangible pain, and then finding the right technology to solve that pain. It's a generic advice, but I think it's true for the Web3 ecosystem as it is for any other at this particular moment. Now, crypto.
Why would I come to take money from Intel?
Sorry?
Why would I approach Intel as an entrepreneur of a Web3?
If there is value in the joint combination of the company that you're building and Intel in any way, shape, or form, then that would be a good reason to approach Intel.
The synergetic values.
There's no vertical like be agnostic to that for this particular space. So.
Cool.
I don't see a real difference between Web 2 to Web 3 in that regards of operating during winter time when the markets are down. You always need to have a very responsible policy regarding the risk you take and the decision, the business strategy that you take. In that regards, winter times I think are the best because teams are focusing on what really provides value. They don't lose their heads, they don't start all these adventures that they don't know how they are going to end up with.
So what you are referring to is how to hold investors' cash once I have them, and should I hold them in crypto assets or in dollars and that kind of question?
Keep a 24-month runway for sure at these times. Be very responsible about your expenses. Same for every business.
I think I always move very uncomfortably in my seat when these conversations happen. In the 8 years that I ran Simplex, there were never VCs knocking on the door. It was always an uphill battle. We had horrible investors, most of them, not all of them, but 80% were horrible. I have a list of 350 VCs who refuse to invest. It's bullshit. Come on, what do you mean? Keep your money. You take money because you need money because you need to survive. So I know about many stories, but I've never met anyone in person that had 3 VCs knocking on their door begging them to take money, especially not in a bear market. If you can take money now in this shitty market, take the money.
Oh yeah.
I meant more in the regards of keep your burn rate low as
Correct.
the project, as the team.
Yeah, but it's not like you're trying to, and by the way, I don't think that this bear market is, this is a bear market conference and it was packed.
It wasn't packed.
Before our panel.
2 cycles ago, bear market conference would be me and you and nobody in the audience. So this is like a bear market. It's not that bad. It was a crazy bull run, especially in the macro environment as well. But this is not like a very bad bear cycle. So yeah, just you do what you need to survive.
No, but basically, also the advice: take as much money as you can,
Always.
as soon as you can get it. Is might turn out to give control over your venture to people that you don't want to control.
Yeah.
I don't know anybody in this panel that it might have happened to, but I'm just thinking.
I can't disclose that happens. Yeah, sure, but you need to survive. If you don't have money and you close down the company, it doesn't matter who was in your board.
Yes.
Yeah, but we also take, and obviously I'm speaking from a position, you can also take a bit more risk-based approach and go for a smaller amount of money. We usually see it as a preferred option if you can have a great team and a great idea, but for example, your go-to-market strategy is too broad or it's unclear. So we as a VC, we are not really sure what are you actually going to do in the next year, and you're also not sure. Then maybe, if the timing is correct, it's a better option to take like $1 million, $2 million, and invest the time and energy in order to focus your go-to-market strategy. And then, you can come much more stronger to a bigger round. It's also like you don't need to look at it at one round and that's it, because it can also, turn back at you if you raise too much at a too high valuation.
My
And
inclination.
just Tomer, one more reality check. Like again, 1-2 million tickets, it's fantastic. I did the rounds and we raised, I think, like $15 million from angel investors in 100K tickets. It was a shit show. So when it's possible, fantastic.
Correct.
But it's not like we
always available.
We shouldn't create the lovely picture with unicorns and rainbows and little midgets with flowers. It's usually a shit show. You take money from whoever is offering it to you. You can try and negotiate the terms. Usually you don't have the upper hand unless you have like a fantastic product which we all want to have. But even then, it's not guaranteed, especially in the bear market. Sorry, I'm clouding the entire discussion about
I love
how
Nimrod so
lovely
much.
this is.
Keeping it real.
I love Nimrod so much. He represents the real soul of our industries. And correct. And basically, long-term focused plays that are keeping low burn rate can survive this, industry and can time the market more. They have some room to maneuver. I think if you are gambling everything and going YOLO on your last dollar, you are apparently a very young entrepreneur and you have no clue what you're doing. It takes a lot of time. It takes a lot of time to build a network. It takes a lot of time to build a community. It takes a lot of time to create resonance between those people within the community, and all these things, if done in a hurry and without meticulous detail or attention, are ending up hurting you at the long run. So,
unless that's your strategy to begin with. So we have a team in the US, they raised $5 million, they're a DeFi team, and they're launching 6 derivatives in 2 quarters. And they say we either make it or we're gone or we're bust. So
yes, I'm extremely uncomfortable with those type of ventures. I don't see the point in them even, but I do agree they exist.
yeah,
They are, the forest has every forest has weird things that are growing at the edges of the forest, and I think they are important because
I admire that kind of approach. I mean, it's not to play safe. It's win or die basically. And I don't know if you think your team is skillful enough.
I think
It's
you
a
will
good
die.
attitude.
You will die at 99 out of 100.
We'll see.
And if you know how to bring real value,
VC money.
yeah,
It's their
that's
jobs. It's their life project for now.
risking VC money on gambling type FTX endeavors. Again, we should try to bring value, and even better if, as was alluded to, you get to see people at the other end that are really benefiting, and especially if they were not that privileged, then you get to uplift their well-being even so little. This is priceless, and this is, I don't know, just a better way to spend your time rather than really going insane with leverage and, I don't know, kind of weird positions. So that's just my perspective, I think. Um, how about other stuff, not funding, with respect to winter and summer? How do you guys go about, say, hiring people, or how do you potentially even prepare yourself to a summer event where you'd want to run faster and then a winter event where you'd want to run slower?
I would love to answer on that. So, and it's kind of relying on what Nimrod said before when we speak about the crypto winter, okay? The title of the crypto winter is not the same event as happened before. It's not the same, it's a different event.
Different winter.
Yeah, it's a different game. For example, fun fact, in the last 6 months, while being deep in the crypto winter, there were deployed 40% more smart contract than ever before. So I can say that personally, I am approached daily with people who want to be a part of this industry, who wants to study more, who wants to understand more their place and how they can onboard there. Because I think it's really clear that the tech is here to stay. I think this POC was already done. We are now on stage 2 of the actual utility options, and people are aware of that. So surprisingly, it's not so hard. I don't really feel a big difference from before in terms of hiring, in terms of managing. And personally, for my approach, it's always about people who are having the same vision and about how we're building the community around our vision.
And I can add that.
Well said, thank you.
Regarding go-to-market strategy and business development at this winter, which is very not a warm winter, it's even a good timing to build relationships and partnerships with any kind of partner, whether it's like a big enterprise or financial institution, protocols, or other crypto startups, because there is less noise. The global conferences are packed with all the most talented teams, and they're out there building, looking for new opportunities, looking for collaborations. So it's even, I think, a good time to build a company. And the big enterprises, they're less distracted by the FOMO and the noise of a bull run. And now they have the time, and they have the patience to tell their innovation teams and the R&D teams to go and explore and do shopping and to create those relationships with crypto startups. So it's actually a great time, I think, to do it.
I want to connect with one of the comments here that it's a great time to actually invest in community building. I think now, even kind of also regarding kind of the other questions that was asked, I think from an ROI perspective, one of the cheapest things that you can do is invest in your community. And it would yield one of the biggest moats possible for your business. And it's an emerging field, right? I think now more than ever, if community up until now, looking at Web 2, okay, was you had the profession of a community manager, okay, like born in Facebook, etc., Facebook-ish type of communities. In Web 3, it's the dead center of your project. And if you know how to crack it and build it right, you stand a very good chance of really being that market leader in your domain. So it's even a call to not even deepen that, but hire the DevRel that has the potential, okay, to, get that star that you've seen that comments and likes and whatever, and engages the most in the communities that you're a part of. I think it's a great time to focus your efforts on that.
So winter is a good time to build friendships and deeper relationships. And that's an excellent point.
I-
Take
I-
notes, entrepreneurs. This is gold.
I heard like 5 times this is a good time. It's not a good time. It's shit. Let's. I mean, it's horrible.
No, I don't agree. I don't agree.
I think it's horrible. No, you can.
Summertime is shit show, and
No,
it's
you
like
can. You
tourists
can
all
find
over
the
and
silver
distraction.
lining. You can find the silver lining. What do you mean distraction?
Entrepreneurship
Making
is always
shit.
shit.
Yeah, that's
Entrepreneurship
true as
is
well.
always shit. What
That's
do
true
you
as well.
expect?
No, but in a
It's not easy. It's super hard to build a company.
But in a bear
So-
market, everything is like 100 times harder. Everything is 100
2
times
years
less
ago, you
profitable.
had that crisis, and 4 years ago, you had another
Yeah,
crisis.
but money was raining from the sky.
Correct.
Not from a not in a good
Maybe
perspective.
not in Intel. I know.
I think
So not from a good, not from a, and just as a
Money from the
disclosure,
sky is bad.
money from the sky, I think is bad.
If it's
easy
not
come,
falling
easy
on
goes,
you,
man.
For
It's
building a
easy
business,
come, easy
for
goes,
building
and
for
it's
building a
nothing.
viable, sustainable business is
It's not
bad.
yours.
I disagree.
Sorry, okay.
It really depends on the type of
They
the
put us
business.
here to be contrarian on the panel.
course.
Otherwise, it would be just a
Absolutely.
disaster.
On that I agree.
There you go.
We
And-
demonstrate successful disagreement right now.
And and you can also disagree and commit. That's also a concept. And just to frame it, up until 3 months ago, I was a co-founder CEO. Okay, they're running for 6 years, so I know that seat pretty well. I have the scars on my back to prove it. Okay, I remember it very well. It was never easy to raise money. Never, just never. It wasn't a fun experience. And I wholeheartedly believe that it's still not a good thing to have money falling down from the sky, because you get fat, dumb, and happy, you lose focus. And the worst part is you think you're okay because you raised a bunch of money. So we'll see the outcomes of 2020, kind of late 2020, 2021 batches, okay, of fundraising in like a year or two, what's going to happen there. But my gut feeling is not good for these massive mega rounds. They have all sorts of other problems that they're going to face that are going to come from the just ridiculous amounts of money that were thrown at them.
Yeah, there's obvious merit in what Nimrod is saying nonetheless, and let's just use the last time that we have to talk about something like what to build, and where do you see potential. We've heard the access with private interfaces as something that might replace centralized exchanges and perhaps deliver on a competitive user experience nonetheless. Inshallah, other ideas or low-hanging fruits or directions that you believe
Security.
need to go.
Yeah, so
Security.
I can start with our shopping list. It's pretty easy. Smart contract cybersecurity, treasury management tools, portfolio risk management tools.
Wait. Treasury management, not your coins, not your keys, not your coins, right? I mean, what do you mean? You mean for businesses? Or
For businesses, yes. Treasury management tools for businesses. On-chain communications is a very interesting vertical to explore. Identity management, reputation management, credit scoring. There was an article in the Wall Street Journal like 5 or 6 days ago about the fraud in the FICO credit score, which is super interesting. Like people, like there is identity theft that is used to mislead you with your FICO score in order to get better loans. So there are a lot of room for disruption in everything related to credit management. And obviously there is still a lot of room for disruption in the basic blockchain infrastructure, whether it's zero knowledge and scaling and node management, node optimization. Yeah, those are like the main ones.
Can I add one thing that it's like literally one that I think that I would add on top of your list is the community management tool and everything that goes like in the ecosystem of the Web3 community solutions.
How do you see technology playing a role in community management, which is interpersonal by nature? So what do you have in mind?
You have a lot of projects, super interesting, that is already running, like Safer, like places that are keeping the money for the DAOs, and it's...
like a centralized budget type stuff.
Exactly, like an hybrid options for communities to manage, but you have like a really interesting project. I would only add that no matter what kind of subject we are trying to touch, it needs to be human-centered design approach, meaning understanding the real pain of the actual users and build on top of that, and not upon a great idea I have. Super important.
So B2C rather than B2B, maybe, or build to the consumers, which is different than Thomas' shopping list. I think it brings us back to the first question of, do you want to start with the users or start with where the money is right now?
I'm a big fan of security. I think that security needs to improve by orders of magnitude. So in the next bull run, 15% of the funds are not stolen from users, from companies. It doesn't really matter. Can
you say more? I mean, in this Bitcoin, nothing is happening bad in Bitcoin. Everything is good. So what?
Bitcoin is great.
So what do you
all
refer to when you say security?
all
like the audit of the smart contracts is the main thing, or
that consumer-facing wallets, which were crazy, consumer-facing platforms for NFTs, for trading, everything. There were hacks like all around everything.
Yeah.
We actually just
everything
saw
everywhere.
Big rounds for security companies, Hellborn, Celtic, another one, all raised dozens of millions of dollars just recently this year. And yeah, we're trying to add our part for data privacy on Web3. We're big believers in infrastructure. We just saw in November some of the VC money that went, I think infrastructure was ranked number 2. So the VCs that are still putting in the money are going into that, laying down better railroads.
Right. Resiliency in the infrastructure is definitely what we crave for. Any cool ideas with storing my keys as an individual, social solutions, other stuff which you found to not losing my keyword?
There is the new Ledger wallet. So
use an AirTag. I'm kidding.
Use an AirTag, yeah, that'll make sure, that'll solve it.
There you go.
There you go.
Put your private key in the bank. That's the safest
Correct.
place.
Tim Cook wants your money.
Exactly.
Yet again. So nothing. Yeah, I think that's, for example, a really interesting problem to try and solve. And proof of humanity also obviously is a super interesting problem that is without a solution.
We're working with a team. They're trying to build a solution that if something happens to you, the owner of the wallet, then you can they call it a strong box, and you can make sure that your next in line, your successor, would get your seed phrase for your wallet, so all your Bitcoin and Ethereum doesn't get lost. They're using our private smart contracts, and yeah, very challenging stuff, very innovative. Hopefully, we'll see the launch next year.
All right. Thank you for the great panelists. And yeah, contribute to crypto, please.